Equity Group results performance shot up in the third quarter ending September 2025, propelled by diversified and growing revenue streams and strong recovery of the Kenya banking business. The group reported a 54.1 billion shillings profit after tax, a 32% surge over 40.9 billion shillings reported in a similar period last year. Releasing the results at the group head office in Nairobi, Equity Group Managing Director and CEO Dr. James Mwangi said Kenya business has bounced back.
The improvement in reducing loss has seen Kenya transform itself from revenue. Efficiency has increased its revenue by 22%. It has increased its non-funded income by 12%. Despite reducing interest rates for customers, the yields have improved significantly because of cost of funds. The last time we saw 4.2 return on asset was 2015, and that is why we have said the turnaround of Kenya is incredible.
Equity Insurance Group reported a remarkable 71% increase in gross written premiums, contributing to a 36% growth in profit before tax.
This is a subsidiary that has impressed us a lot. It has now processed nearly 18 million policies in just 3 years. An average of 3 policies, because it's 7 million unique customers. It has done what we expected it to do, to disrupt and democratize insurance.
Equity Bank Kenya sustained its micro, small and medium enterprise ranking leadership, disbursing 45% of the 201 billion shillings MSME loans in Kenya between January and July 2025.
Our rating is only 400 billion. We are left with 600 billion, which we are keeping in cash. I want to appeal to Kenyans that we understand the environment. We dominate. 45% of all SME loans are given by equity. The countries again we are in make it to the 15 top economies. Kenya, as the number 6, the largest economy, if it is surrounded by extremely fast growing economies, that warmth will, of course, adhere to Kenya, and it's no longer the Kenyan bank. It's a financial group that has a technology company with an MVNO license, with a PSP license for payments, with e-commerce capability using APIs, and with significant digital lending capability.
Regional subsidiaries made significant contributions, with Democratic Republic of Congo entity Equity BCDC and Equity Bank Rwanda achieving 19% and 34% loan growth respectively.
So the World Bank released the valuation of the Congo Basin forest and valued it at $23 trillion. That's bigger than the GDP of the US. That's just the basin. If you then valued the energy of Ingadam, if you valued the mineral resources of DRC, that tells you the opportunity that equity positioning itself and having 24% of the market share in DRC means to us.
The group has demonstrated how financial institutions can catalyze inclusive and sustainable growth by aligning private capital that is anchored in the Africa Recovery and Resilience Plan and its tri-engine business model.
When we look at the global microeconomic landscape, because it's in context, we can see where we are globally. If we look at December 2024, it's incredibly powerful that now the GDP of the global economies is lower than the market cap of the stock exchanges. What that means is the private sector has become bigger than the public sector. And that really positions what we have been advocating, that if the private sector is bigger than the public sector, then it's the responsibility of the private sector to finance development.
Equity Bank was named the best regional bank in East Africa at the African Banker Awards 2025 and retained the title as Kenya's most valuable brand in 2025 for the second year running. The recognition affirms the group's regional leadership and role in advancing financial inclusion and socio-economic transformation across the continent.